It's the last business day in the week. Welcome to Business Morning. Thank you for joining us. I'm Chimeze Obi Iwago. It's been a busy and arguably fruitful week for most members of the business community and governments, both here in Nigeria and outside the country. The 23rd edition of the Nigerian Economic Summit ended in Abuja yesterday, where issues of how to actualize the country's economic recovery growth plans were brought to the fore, with various participants from different sectors of the economy airing their views. Also, the annual meetings of the World Bank and the IMF is ongoing in Washington, D.C. The meeting proper actually starts today and will end on Sunday. However, the week has been filled with a lot of seminars, press briefings, and report presentations. Here at Channels Television, we continue to keep a tab on the proceedings at those meetings. In the meantime, let's look at how the markets traded on Thursday. The equities market, the domestic bourse, closed positive, with the all-share index appreciating by 0.22% to 36,732.34 points as investors hunted bargains in value stocks. Performance across sectors was broadly positive, with the insurance, consumer goods, oil and gas, and industrial goods indices recording gains as investors demanded for the shares of Mansard, Flour Mill, Forte Oil, and First Aluminium. On the flip side, the banking index closed negative following a sell-off of United Bank of Nigeria stock. Meanwhile, market breadth was positive, with 30 gainers and 13 losers. Total volume traded increased by 31.89% to 443.68 million units, valued at 3.18 billion naira, and exchanged in 2,993 deals. And other fixed income market proceedings in the bond segment remained bullish, with average yield contracting 8 basis points to 14.88%. Yields declined at the mid and long ends of the curve owing to demand for the April 18, 2037 bonds and March 17, 2027, while yield expanded at a short segment driven by the June 29, 2019 bond. The total value traded came to 23.2 billion naira in 165 deals. In the meantime, activities in the Treasury bill segment turned bullish, supported by improved system liquidity as average yield contracted by 5 basis points to 17.07%. Yields moderated at the mid and long ends of the curve, while sell-offs caused yield expansion at the short segment. All right, let's talk more on the markets with Eremosele Aziva, one of the investment analysts at Afri Invest. Good morning, Eremosele. Thank you very much for joining us.
Good morning, Chimeze. Thank you.
So let's begin with the equities. We saw a kind of a reversal in trend yesterday at the market. How would you describe that trading activity yesterday?
Okay, thank you. So the market actually started the week on a positive note, but we had 2 days of decline on Tuesday and Wednesday, and we saw it rebound yesterday as investors took position in some market bellwethers. So you had, especially in consumer goods sector, so you had likes of Nestle, Nigerian breweries lifting the market. Like you mentioned, the 4 of the 5 sector indices were actually up yesterday as well, save for the banking index, as we saw some profit taking in Guarantee and some other banking stocks. We dragged that. But generally, sentiment in the market still remains positive. If you look at market breadth, so looking at the ratio of gainers to losers in the market, it shows that there's still a generally positive sentiment. And from trading activities that we've seen in recent weeks, we believe a lot of investors are starting to position ahead of the release of Q3 2017 earnings, which are expected to be largely positive, and this has been a major determinant of trading activities.
So what companies, talking about the third quarter earnings now, what companies do you think investors are really putting their interest in to see what they are going to come up with?
Okay, so first of all, I think a lot of investors' interest is centered on the banking the banking index. I mean, despite the challenges that were faced in 2016, we saw the resilience of the banks churning out positive results, and this has been sustained in 2017. So when you consider the fact that we've seen a lot of macroeconomic indicators actually improve, it's only natural that you'd see a resultant impact on earnings of these companies. And like I mentioned, most of the banking stocks, so you look at the likes of Access, UBA, Zenith, Guarantee, expected to churn out positive results. And even for some of the other sectors, so in the consumer goods sector, we know the economy has come out, the Nigerian economy has come out of a recession. We've seen manufacturing PMI improve steadily for a greater part of the last 4 to 5 months. So we're seeing improvements in macroeconomic fundamentals, and we believe this will be reflected in performance. So this is the major reason why we have a generally positive outlook on earnings for the period.
Now, yesterday we did note that the banking sector actually was a drag, at yesterday's trading session, and the IMF in its recent report actually raised concerns about the Nigerian banking industry. Do you think that could have helped in driving that kind of sentiment that we saw? And do you think that is also going to have some kind of implications towards the sentiment investors are probably going to have towards the banks, for the rest of the year?
Well, maybe not necessarily. What we saw yesterday was majorly, we know GTB is the most capitalized stock in the banking index, and we saw some profit taken in that stock yesterday, which was what sort of dragged the banking index. But I mean, the Nigerian banks generally, especially the Tier 1 banks, have been able to demonstrate their resilience amid tougher operating conditions. So even with the weakening in the domestic currency, we've seen the impact it had on their capital adequacy ratios, but they've still remained largely above the minimum guidance from the CBN, which sort of shows that the banks are still in a largely healthy position. So we don't think this would necessarily have any direct impact on the banks. We don't expect to see any knee-jerk reaction from investors based on the statement.